And good afternoon to everybody. I hope you are locked and loaded for a very, very busy next 50 to 55 minutes together. I'm going to please be asking you to turn your cameras on if you can. It would be wonderful to have a proper engagement, to see real human beings. We've had so many Zooms and so much Zoom at Aurik, across the US, the UK, Europe, South Africa. We run around 220 to 230 Zoom sessions a day. It is beyond exhausting being in front of screens, but when you see faces and you see warmth and you see character and you see personality, it makes an enormous difference. So welcome everybody, and we're going to get straight into it. Did you know that there are very few absolute truths in the life? We are all born and we will all die. The sun rises and the sun sets. Time waits for nobody. You can't change anyone. Hands up if you disagree. No hands are up. Robin, I see a big smile from you. You cannot change anyone. They have to change themselves. The other thing that I think is so valuable as an absolute truth is that the only thing worth spending any time on are those things that you have control over. And the one thing you have 100% control over is your attitude. Of 10,000 businesses that we engaged with in a survey in 2018 and 2019, 88% of the business owners said they wanted to grow. Yet, it's not working for a couple of reasons. Firstly, talk is cheap. And what we discovered is that an intention to grow was really surrounded in hope. Of those businesses, 14.7% spent more than an hour a month as a leadership team talking about growth. Within the businesses, 95.2% of the employees were completely unaware of what the growth was, if there was growth at all. And even worse, 68% of their functions were misaligned to growth. The functions of marketing to generate leads, sales to close deals, operations to fulfill your promises, administration to manage the experience were completely misaligned. They went for help and they sought help, and they went to accountants who told them what happened last month. They went to consultants who researched what they could do, might do, and ought to do. They went to advisors who told them what to do. They went to weekend success seminars where they felt inspired to grow. And they went to a number of coaches who helped them get a growth mindset. However, they wanted growth, not advice. 88.6% of businesses that sought help said, we want the outcome of growth, not the advice of growth. Of those that were given big, heavy, hefty, well-researched business plans on how to grow their businesses, only 4.9% of them could ever implement any of it. What does it mean for us as business owners? Well, globally, 5.4% of businesses started succeed in an exit. They eventually get sold. And yet of those, 69% of them have to make horrible concessions around the price or value of their business or the terms of payment. In family businesses and in professional services, where classically you exit by succeeding your responsibilities to the next generation, 74.3% of those succession efforts fail. It has nothing to do with your intelligence, your commitment, your dedication, your hard work. The stats are against us, and they're against us for very good reasons. My name is Pavlo Phitidis. I'm a co-founder of Aurik, its current CEO, investor in businesses, and an author. I would, if you have a chance and have not yet, recommend, obviously as the author, that you find these two books and take a good read. They're story told, So they won't be dry, horrible, boring technical business books. They're stories about people like you, like me, and like the many others we've met and worked with in Aurik. But I want to start off with a question for you. So why do you do what you do? I'm going to share a few ideas with you in terms of our journey ahead. I will absolutely have you out at 5 to the hour, so no need to panic about the next meeting. In order to make it interesting, I'm going to talk a little bit about our backstory, the problem and solution to business growth itself, how we get it done, as well as what tomorrow and today might look like, a story about tomorrow and today, one that really reflects someone very similar to you, very similar to me, and very similar to the life of a business owner. I want to share some questions. There were some great questions that were submitted in the registration form. So to all of you, thank you very much for the questions you put forward. I really invest an enormous amount of time thinking through what the most sensible, reasonable, practical answer can be, because some of those questions were indeed challenging. And then I want to end off with an invitation. So once upon a time, many, many, many years ago, I was born to a family of entrepreneurs, a father and two uncles. They had to be business owners. They had no corporate jobs. They had no government-related jobs. They worked hard. They did everything right. They committed themselves deeply, profoundly to their businesses. They loved what they did. They believed in what they did. They looked after their teams, they looked after their customers, they looked after their suppliers. My uncles worked well into their 80s, not because they loved it, but because they had to. They had to because they had built businesses that weren't able to be sold. My father faced a very similar fate. I started my career by acquiring two businesses, taking on horrible levels of debt. What was interesting about both businesses is that the first business was a family business that had been established about 34, 35 years prior to that exit. And when I looked at the business owners who I acquired the businesses from, they reminded me of my family. That business I purchased for $1 and took on $420,000 of debt. Thankfully, it got turned around. The second business I acquired was a second generation, was a business that had 3 business partners in it. They were all the founders of the business. They were approaching their 33rd year of trade, and they were well into their 60s. They had opted to sell the business simply in order to create a retirement lifestyle more than anything else. What struck me in both cases is that both those business owners, like my parents, and like my uncles, all had initially inspirations that their retirement would come from a successful exit, but it wasn't to be so. After that, I spent a number of years in mergers and acquisitions with a leading investment bank, and I sat with this rich portfolio of companies that were looking to either exit through sale, as well as a substantial bunch of buyers, listed entities on the Johannesburg Stock Exchange, that were looking to make acquisitions in order to bolster growth and innovation. And if we were able to get 3-4% of all the transactions done, it was rich, because the asking prices of business owners and the offer prices of business buyers were miles apart on a consistent basis. I got hauled out of there into a family business, and there I had to face up with the young lion looking at the old lion, as I realized that my father's business itself was in dire straits. I saw that he had relied on having invested everything he had from when he had started the business back into the business. He relied on the business's exit as, let's call it, the retirement for my parents. I had no option. I stepped in and we went through a very, very difficult succession after I realized that there had never, ever been a quantifiable exit plan. After that, I burnt out and went to go and lived in the US. I spent a number of years on the west coast of the United States. It was vibrant and rich and bubbling over with capital raising taking place. The internet was booming. There were acquirers left, right, and center. There were investors everywhere. The best and the brightest were coming into the United States, where I spent most of my time advising on startup strategy, growth strategy, and capital raising strategy. Through that, I got access to some incredible statistics. And it was there that I learned that in a country with 31 million businesses, 94.6% of those businesses failed to exit. They failed to sell. And folks, I'm not talking about startup businesses here. I'm talking about established businesses that had done well by their owners and founders. When it came to the final moment of exit, only 5.4% of them were able to get the deal done. That also pulled me into a leading MBA school where for my sins I spent 2 years marking MBA papers on company valuations. And through that, I got introduced to 7 different techniques on valuation, all of them mathematically based, along with the art of supporting the maths. Because valuation is both technical, but it's also about strategy and presentation. From that, it became very clear that this was a problem worth solving. In order to do so, I established in South Africa Aurik with my co-founder, and in order to learn how to get the problem resolved and solved, what we opted to do was over a 9-year period, start 12 businesses. 2 listed, 2 failed, 3 were sold to management, and 5 were sold to corporate entities looking to acquire innovation and growth. But what was most interesting is that the last handful took half the time and more or less a third of the investment to build to the same value as the first handful. And through that, we architected, understood, and interpreted a design on business growth that we could then apply to established businesses in order to get to where you want to get to ahead of time faster, with less investment, and with certainty of an exit. In doing so, we then solved 3 outcomes, specifically around scale, growth, and domination. Many of us in business today are looking to answer that particular question. How do we create scale in our business in order to accelerate growth and dominate our little niche, our little piece of the pie that would see our revenues grow and our profits follow, if not exceed, the growth rates of our revenues? For some of us, we are at different stages where we're saying, how do I grow my business with the view to deepen profits to support a future exit in the next 3 to 5 to 7 years? And for some of us, given the nature of the business we're in, given the nature that it might be in family or it might be in professional services, we're asking, how do we succeed responsibilities from ourselves to the next generation of leaders through a growth strategy that would allow us to exit and be sure to be paid? And folks, what I mean by that is in succession strategies, you're normally paid in the years after you have exited it by the next tier of ownership. Getting that aspect right is tricky and vital at the same time. We've been very fortunate in that we've now worked with, oh dear, that number's wrong. We've now worked with 3,049 companies in South Africa, the United States, the United Kingdom, and Europe. And we've been fortunate in the sense that we've managed to generate an average annual compound revenue growth rate for our clients sitting at 28.9%. Effectively, mathematically, that will double your revenues over a 35 to 36 year period. The EBITDA numbers, in other words, the profit before tax numbers, are running at around 32.4% growth, and we've had some favorable client ratings. I have a question. Where do you sit in scale, grow, dominate, grow, profit, exit, or succession with a view to grow and exit? And I'd love to run a poll if we have one ready. Pips, let's get a view from all of us on screen around whether we are in the red, blue, or brown. So let's see, 36%, 38%, scale, grow, dominate. There's a close race. There's a close race between scale, grow, dominate, grow, profit, exit. In fact, they are literally sitting one-on-one, and scale, grow, dominate looks as if it's about to win the race, but grow, profit, exit crept up very quickly and quietly from behind and seems to be leading the pack. We have, in truth, if I was to combine the numbers, 44%, thanks Pips, 44% in grow, profit, and exit, 19% in succession to grow and exit. Wow, folks, we have a lot of people who want to get out of the game at this point in time. We're going to talk about how you do it profitably. And then we have 36%, the younger ones amongst us, looking to scale, grow, and dominate. And we're going to talk extensively about why we say scale before grow. The two of them mean fundamentally different things. To increase the growth of a business while deepening its value, every business owner has to resolve 9 challenges that present over time. In terms of leading my business, the first is relevance. After years of effort, how do I find the inspiration and motivation to remain relevant in a noisy, forever changing, increasingly competitive environment? Time. Most of us spend more time doing and less time leading. How do I build my business to free up my time from daily, weekly, monthly operational activities to focus on growth and value? Control. Because you carry the business's entire risk, the need to maintain control often places you front and center of your business 24/7. How do I free myself from the tentacles of this control trap and delegate responsibility to get my team to do the heavy lifting sustainably? Across sales and marketing, how do I find, win, and hold customers in a crowded market where customers have become more discerning and ever more skeptical? And how do I get this done without having to reinvent marketing strategies constantly? Operations. Why am I constantly being called back into operational activities that rob me of the time I need to invest in growing revenue and profit that would build my asset of value? Team. Why in a world where people are more skilled, educated, and capable, is it so hard to find the right people to do the right thing at the right time all the time? Without this, creating sustainable and reliable growth becomes impossible. Looking ahead, how do I get my business growth formula right in a way that would see revenues and profits increasing on a more consistent basis? Am I building a job or an asset? If without you there is no business and future, then you won't find a buy when the time comes to exit. A job can't be sold. And wealth. How do I build my business into my greatest wealth generating asset? To maximize your income and monetize your years of risk and investment through a profitable future exit, you must build in the 5 levers of asset value today. Businesses are not bought. They must be built to be sold. Now, businesses are not bought. They must be built to be sold. It's a harsh reality. And most of us only realize that 20, 30, 40 years into the journey. It takes more or less, we spend more or less between 30 to 80 hours exiting our business after a 10, 20, 30, 40-year history in building them. So from an Aurik point of view, we apply the asset to value growth system to resolve these challenges. It is a business design issue. They say structure determines behavior. It certainly works right across the world of engineering, and it certainly works right across the world of building a business. There are 5 layers to an asset of value, and I'd like to take you through them very briefly. And let's see where you find resonance in each of the layers themselves. The first 3 layers, we fundamentally argue that the starting point of every business is, well, why do you exist as a business? Not why do you do as a business owner, but why do you exist as a business? And that is a question that typically is answered by your customers when you ask a very, very tough question. What makes my business special in the eyes of you, my customer? Often what we hear when we engage with business owners is they've got fantastic features to their products. They've got a great factory floor with incredible equipment. They have a superb team. They have excelling levels of service. They've got great pricing. But ultimately what we have seen, especially over the last 10 years, whilst all of those features matter, it's not what creates success with the customer. There's not one customer out there who spends a penny of money, and that includes you as individuals, that doesn't do so with the view to get a problem solved through a good experience. Getting your business orientated around the shifting, changing dynamic of the customers you serve is probably the most significant challenge that we all face in our businesses. And it goes to the big issue of how do we constantly remain relevant in a fast-changing world. Getting that right is essential, because if we understand firstly, who do we serve, what problem do we solve for them, what is the cost of the problem should we not solve it for them, and then more importantly, what experience do they want in how they learn about us through marketing, how they engage with us through sales, how they are serviced by us through operations, and the experience they have in the entire process through probably the most frustratingly boring part of every business, our administration. Understanding that in terms of your business and defining your business along that takes us to the next level. And that next level is, with that understood, we can now build what we refer to as a system of delivery. Think about it. A system in our language, from an asset of value perspective, really refers to the functions of a business. And we are taught that all businesses have the following functions. Whatever sector or industry you're in, whatever size your business is, you have to market your business. You have to tell the world that you exist. How do you do so? With what messaging? The next thing is that should you get inquiries, how do you, through the sales function, engage that potential client or customer? What journey do you take them through to create the confidence and trust that they require in order to transact with you? And once transacting with you, the next function is all around operations. How do you fulfill your promise in the way that you service and deliver to that client? Thereafter, administration. How do you build and administer and maintain that relationship with that client? The other elements might well be procurement, as you would find that in a buying function, but those functions are really systems, and systems all have individually 6 components. They're activities in a sequence with a measured outcome that can importantly be taught, can be supported with a good job description and training capability, and importantly can be properly remunerated. If we turn functions into systems, which means that we have control over how those functions evolve in the life of a client or customer, and we do so in a manner where those systems are teachable, it allows us to then answer the question, how do you achieve consistent, reliable, predictable experiences each and every time with each and every customer? It's an essential aspect of scale, and without it, growing in a manner that would be sustainable becomes impossible. A system of delivery, they are the gears, the cogs that make a business work. And once you have those systems built to deliver on the positioning that you believe makes your business special, for the first time, you can responsibly and reliably get a great team on board. Because the most frequent question we asked, how do you get the right people to do the right thing all the time, every time? Think about it, folks. We've all employed people. When you employ, what do you employ against? A job description template off the internet, or a process that you've thought through in your mind to create a job function that you believe is needed because of the pressures you're facing in the business? Or is it aligned and linked to one of the functional systems that you're expecting a new recruit to be able to handle and manage in support of the rest of the team, in support of the positioning that you've identified? In the case of an asset of value, we fundamentally believe that unless you've positioned your business to stand apart from the tens of thousands of competitors, it's a non-starter to begin with. Once you get that positioning well defined, build the mechanics of the business to deliver on it. And once you've built the mechanics of the business to deliver on it, get a purposeful team to empower it and bring it to life. If the mechanics, the system of delivery, fit the definition of being activities in a sequence that can be measured, that are teachable with a job description and good remuneration, you're well set to do so. These three elements, for those of you looking to scale, grow, and dominate your industries, are the first three building blocks of achieving that outcome. With these three elements in place, you get the following benefits. The first thing is that these three elements release your time. It releases your time from being square and center in the day-to-day operations of the business. Think about it. You've got systems that tell everybody how everything works. Those everybody how everything works are guided and shown to you by your customers in how you've positioned your business to be of service to them. You've employed people to operate and run the systems and take ownership and control over the systems. With those elements in play, you no longer need to be square and center in the day-to-day operational activities of the business. With those elements in play, your business will grow organically at 6, 7, 8, 9, 10, 12% a year. With those elements in play, and with your time released, and organic growth being driven by the architecture, the design of your business, you take that time to then move to the next two levels, and that is leading accelerated growth. This answers the question, how do you grow revenue and profits? If you don't take time to lead next level growth, who will? It is fundamental that that next level growth is built on the back of the first three layers. If that next level growth opportunity disassembles your system of delivery and creates chaos in amongst your team, logically, what does it do? It pulls you back into the engine room of the business on a day-to-day basis. It erodes that organic growth. It requires you to be guiding, leading, shouting, screaming, and directing on a day-to-day basis. Everything that you had built prior to accelerated growth is disassembled if that next level growth opportunity is ill-defined. And those next level growth opportunities need to be understood within the context of those first three layers, not where the next trend or next so-called market might open up. Holding your positioning, leveraging the system of delivery, and having your team lead the execution on the next level growth strategy you've identified is essential here. Once you have that in play, the last, let's call it, sequence of design in the business is about deepening your value. This answers the question, how do you secure your value? We will share with you the 5 levers of valuation, because understanding the 5 levers of valuation as a leader in your business, as the single biggest shareholder in your business, is essential to ensure that what you're building is an asset and not a job. Think about it. You can sell and trade an asset, but you can't sell and trade a job, because the job, if it's you, is not up for selling and trading. The last 2 layers give 3 outcomes for you. You get accelerated growth, and by accelerated growth, we mean growth in revenues, absolutely, but a higher growth rate in profitability. You get the profitability increase, and there you then have time released further. 3 essential elements as we move into the future today. So let's talk about that. If we start with the end in mind, right? You hop in your car. Where are you going and why? Is it simply a road trip? Is it to get out of your partner's hair or to get them out of your hair? Why do you go where you go when you hop in a car? The first thing you do is you set a destination. We're going to start with the end in mind. And given the absolute truth, an absolute single fact, that there are only 2 destinations for every business globally, either a sale and exit or closure, let's talk about the day when it arrives. And you have to negotiate with me, a potential buyer in your business. So the way that valuation more or less works globally is that you get a valuation that is more or less around 2 times your EBITDA, or profit before tax. A nicer way of saying it is we'll call it the owner's discretionary earnings, because a number of people put a whole lot of other expenses through their businesses. So if we strip out all the benefit that you as a business owner get, and we add it to that profit before tax number, think about what your number is for the last 12 months, multiply that by 2, and you have an estimate value on your business. And I can hear some of you screaming and saying immediately, yeah, but it's not the case. You know, what about the fact that I might have plant and equipment that's worth more than my profit? What if I have stock that's worth more than my profit? Folks, nobody buys that stuff. When somebody buys a business, what they're buying is a future stream of cash flow. Profit before tax and your earnings multiplied by 2 give you your valuation. So let's say you're making a 3 million rand profit before tax, or EBITDA. I'm going to apply a 2 multiple. It means your business today is worth 6 million rand. You have to now defend your valuation, and I, as the buyer, am going to attack the valuation. And there are 5 levers that I use in order to get this done. The first set of levers revolves around competition, or what we have referred to as positioning. And the first set of questions I ask you are, Sean, what makes your business special in the eyes of your customers? What sets you apart from the 5 or 10,000 competitors similar to you? And if you argue that you have uniqueness in terms of your features in your service or features in your product, I know full well as a buyer of businesses that if you have a feature or product advantage, out of sheer necessity, your competitors will have the same features or product advantages soon. Margaret, if you turn around and said to me, it's our price, out of sheer necessity, I know that your competitors will have to marry and match their price. And Jimmy, If you turn around and say to me, it's my service, then I'm going to technically rip your business apart to make sure that your service is baked and built into systems and not driven by you and your presence. Because without you there, it means you have no service. Positioning is where my first line of attack comes from. If I hear that what sets you apart is that you have narrowed your business and you have become an expert at solving problems for a very well-defined group of customers by giving them an exceptional experience, immediately I know that your business is geared to move with the changing processes, whims, statuses of the market itself. You get an extra point. The 2 multiple goes to a 3. After that, my next line of attack is, okay, so Dudley, how does the whole thing work? I understand what sets you apart, but how does it all work now? Show me the mechanics of the business. If you draw them on a whiteboard, it has no value for me. If you share it with me in detail through a long soliloquy or business plan, it has no value for me. When I make my acquisition, because it's a pricing game for me, I want to see where the activities are that govern how you deliver on your positioning. I'm going to look at marketing. I'm going to look at sales, at procurement, at operations. I'm going to look at your people systems, your money systems. I'm going to look at the administration systems. And if I don't see them documented in a fashion that I know they individually make sense and thereafter work together to deliver on that positioning, I'm going to attack your valuation further. To the extent that you can show me it's there, the 2 multiple goes to 4. My third lever is around who makes it all happen without you there. Because here's the thing, Damon, you're selling the business to me. I'm buying the business from you. It means tomorrow you're not there. And if you're not there, who's going to make this whole thing hang together? Who's going to bring to life the system of delivery to make that positioning a reality in the market? I'm going to look at your team and understand what your team do. I'm going to, more importantly, understand whether your team can do what they do without your presence there. And in doing what they do they work as a team to create a single, consistent, reliable experience for your clients and customers? Who leads? Who follows? Who's accountable? Who's responsible? To the extent that I can see it's there, your multiple moves from a 2 now to a 5. Thereafter, I'm attacking growth. Because if I'm buying a business that has not grown, and you are promising me a future of growth in order to negotiate and argue and sustain your price, how am I to believe you? When you sell me a business that has lots of potential, I might buy that, but I'm not paying for it, because that potential will come off my dollar and my sweat and my back. It's essential in scaling and growing to dominate that you're constantly growing. It's equally, if not more essential, prior to exiting your business, you need to be able to show 12, 24 months of growth. And then finally, I'm going to take a long, hard look at you. Because if I even get a sense that this business cannot function without you, what it means in my acquiring it is that tomorrow, with you gone, I've acquired nothing. Folks, this is how it plays out. The way that you get a 6 million rand business today, the exact same business, to be bought for 21 million rand, is by demonstrating you've understood the 5 levers of growth, and mechanically and technically through the design of your business, in terms of how you approach the market, how you've built the business, and how your team functions, you can be affirmative in showing me that you positioned yourself uniquely in an overcrowded, noisy marketplace. You have a system of delivery that makes everything happen. You have a purposeful team that runs and leads the systems. You've had growth prior to exit. And most valuably, your requirement in the business occupies 15–20% of your time. That's the difference between an asset and a job. The two turnarounds I acquired a number of years back, the one business was 38 years old, the other business was 33 years old. In truth, what I acquired, both for $1 a piece, was a job that the owners thought was an asset. I want to share a quick story with you. It's one of my favorite clients, I suppose largely because it's one of our oldest clients. This individual was a baker. He was 55 years of age, stepped into Aurik, grumpy as all hell, looked like this fellow over here, behaved like this fellow over here, big burly fellow, and we began a conversation. The story behind him is that he was a fourth-generation baker. His great-grandfather was one of the bakers coming out of France where they had the original recipes for croissants. They milled their own flour. They had these hot ovens that were guided and driven by wood. They created the real deal, stretching back generations and generations. He had started his bakery at the age of 29. He'd been running the bakery just on for 27–28 years. And he had attempted to sell the business at the age of 55. And I said to him, why did you not sell? And he turned around and he said, my business has been on the market for 24 months. I cannot get the price that I need. And more importantly, I cannot get the price that my business deserves. I said, what deserves a better price? He said, the assets in my business, my ovens, the equipment, my stock, my relationships, my brand, my reputation is worth more than what the market's prepared to offer. Already an interesting lesson in how valuation works. He said, the second reason is that what I used to love, I now hate. Every day feels like a slog. Instead of driving my business, my business drives me. My team need me day in and day out. My customers and suppliers constantly on the phone with me, and all the heavy lifting has been left to me. He said to me, and I'll never forget these words, Pavlo, it's like me being on a ship with a whole lot of masts. The sails have not been pulled up, and everyone is standing on the deck looking at me doing all the rowing to get them to a destination. I'll never forget that image. It left such a powerful impact on me. And he then turned around and he said, you know, the business has just not become fun anymore. He said, there are so many fires I put out daily. And I used the analogy of a ship, which he shared with me. And I said, so is it like you being in the engine room and not on the bridge? He said, absolutely. We began to work with each other. And over a period of time, we repositioned the business into focusing on one client segment only. Prior to that, he was serving supermarkets with fresh baked goods and ovens and technical equipment. He was serving small bakers with flour. He was serving people like you and me in coffee shops. And he was serving the hotel groups out there with continental breakfasts. It was an incredibly complex business, which he initially said was smart because it diversified his risks. We then set about, after simplifying his positioning, to serve the hotel group sector only. We built a system of delivery. Let me share with you what we learned. Typically, the way that you sell fresh baked goods into the hotel sector is you visit the food and beverage manager. It's their function and job to buy the beverages and food products into the hotel groups. Traditionally, he had always sold to the food and beverage manager. And what we had learned is that eventually that in these big corporate entities, buying is done through committee. We learned that finance had a word, procurement had a word, and so did HR. And that relied on redesigning completely the marketing systems, the messaging behind it, in order to create a good experience for not only the finance managers, but the procurement managers and HR managers too. Having gotten the marketing system built and made right, the sales system also relied on engagements with not only food and beverage, but finance, procurement, and HR too. Three fundamental buying elements that were left out of his former engagement. Over a short period of time, he began to dominate the hospitality industry. And with that, he started to get consistent organic growth. With his time released, because in how we work, we attach our fees to the growth of our clients, we pushed him to identify the next level of growth. And eventually, after 6 months, we found it in supermarkets, because supermarkets need 5 days of the year fresh baked goods on their shelves to get the morning trade, much like the hotel groups needed 365 days of the year fresh baked goods in the dining hall for the continental breakfasts. In moving into the supermarket industry, the positioning remained the same. 365 days of fresh baked goods onboarded in our shelves or in our breakfast buffets. The system of delivery designed to service the hotel groups was the same system of delivery designed to fulfill their promise with these supermarkets. The team who led the system of delivery was the exact same team in order to service the supermarkets too. The result was a new stream of revenue from a completely new segment came into the income statement, and the operational costs only marginally increased. His revenues of 54 million rand over 24 months went to 136 million rands. And when your costs moderate and your revenues grow, ladies and gentlemen, what does it do? It fattens that profit line. In his case, it grew by 24.3%. The initial valuation of 17 million rand, which was the best offer he had had, on a business that was reshaped into an asset of value, was now mathematically supporting a 231 million rand valuation. This man is no different to anyone on the screen. I want to start ending off by sharing how we work with you in order to get this done. Going back to the analogy offered to me by the baker, if building a business is like sailing a ship, let's just have a look at the basic architecture of a ship. There are two main areas. You have a bridge and you have the engine room. The bridge is where you have a 360-degree view right around you. You have a series of panels and dashboards. You're in control of the direction as well as the speed. You're in control of the crew. You're in control of the crew because on the dashboard, you can measure all the systems that operate and run and govern the successful sailing journey of the ship. You can navigate and be sure that you're always on track to get to the final destination. You can set the final destination and navigate towards it. The engine room, however, is where you've got to get all the cogs and gears of the engines working. You've got to constantly make sure that those propellers are turning 24/7. And through that, you get propulsion in the engine room, but you get direction and leadership on the bridge. The engine room, you might note, is below sea level, below the plinth line of the ship. There are no windows. You can't see anywhere around you. The analogy shared with me by the baker, that it feels as if my life exists entirely in the engine room, that without me there, nothing can happen on a consistent, reliable basis, is the experience that many of us have had and continue to have. So using this analogy, let's talk about how we sail with you. Prior to working with any client, we agree one destination only, and that is an asset of value. Thereafter, we start sailing on the journey. The first part of our journey is where we go through a series of diagnostics. We take a deep dive into your business and we look at the levers of growth and value. That means we look right across the system of delivery, the marketing systems or functions, sales systems and functions, ops systems and functions, procurement, people, money systems and functions, governance systems and functions, management systems and functions. We look to see what's there. We look to see what's missing so we understand what gap needs to be closed. System of delivery, first piece of diagnostic. We look at the leadership team dynamics. How do you work with your leadership team? What is the chemistry between you? Is everyone playing to their strengths? How do you understand why Jack makes decisions like this, but Jill makes decisions like that? Business is a team sport. We then look at the contextual strategy and say, where are you located? In the middle of this vast ocean, where are you located? And where exactly is that final destination? What is the shortest route to get there? And then finally, we look individually for each of you at what do you personally want to achieve. We've had cases where working with a team of 3 business owners, the age differences have been 20 years. The older folk are looking to exit, the younger folk are looking to scale and grow. How do we marry and match both agendas and objectives whilst caring for the value of the business? Once that diagnostic phase is finished, we take all the data that we get working with you and your team to then set the growth goals. Strategic growth goals, number growth goals, system growth goals, and personal growth goals. And a goal is not a goal if it's simply stated. A goal is a goal only if it can be measured and the steps taken over a period of time to achieve that outcome can be defined. It is probably one of the most crucial pieces of work that we do with the leadership team of every business. Those growth goals are your growth goals. Those growth goals set the relationship with us as growth partners to make us both accountable for the achievement of those growth goals. All of that is loaded onto a dashboard because our work with you is work on the bridge of the business, not the engine room. And once we are on the bridge of that business, we configure the asset of value growth system to first work with you and your team to get the positioning of the business right. It answers the question, how in a crowded, overdone marketplace do I set myself apart? From there, once we have got that right, we then build the marketing systems with you and your team, the marketing and sales conversion systems with you and your team, the operation systems with you and your team. The system of delivery is then built, the team has been delegated the responsibility, and the last period of time, over a 24-month period with you, is then focused on next level growth. The way we get this done is we have facilitators who are experts across 13 different distinct areas of activity in the asset of value growth system. It's horses for courses, and we get the most appropriate skills and talent within our team to work not only with you, but your team in order to get your team to be co-creators around, especially the system of delivery. We have learned that if your team is involved, your team too become co-owners of the systems that are developed, making them accountable and responsible, and seeing you in a position where immediately delegation occurs as a result of that. All of this is measured on a dashboard. We carry the data, we contain the data, we combine the data in order to start building the body of evidence around the valuation of the business in the future, or around the valuation of the business to support a capital raise. 6 reasons to work with us, very briefly. What's in it for me? The 5-finger salute. The first thing is, we align as growth partners. We're not consultants, we're not advisors, we are not coaches, we are growth partners. We don't operate a bill you and leave you engagement. 70% of our fees are linked to your revenues. If you don't grow, we don't grow. So we select our clients as carefully as they select us. 13 expert accredited facilitators work with you and your team, an important element of execution in the business, not one or two people with good ideas. We work with you and your team in order to ensure immediate execution on systems that are built for the fastest growth impact. It's tangible because everything sits on your dashboard. Your data, your system of delivery is visualized on the dashboard. You can see this intangible thing called a system of delivery. You can delegate from the dashboard. You can give your team access onto the dashboard, and you can then performance manage through the dashboard. It's a complete system that builds in and bakes in the 5 levers of value. And lastly, because your growth is our growth, we have a network of relationships right across the United States, the United Kingdom, Europe, and South Africa, where if additional support is needed through expertise that falls outside our domain of expertise, but that would support the growth of your business, we have the relationships to make it happen. Many of our clients in South Africa are looking to build in rands and ensure revenues in dollars, pounds, or euros. I want to end off with just a couple of questions that were asked. These were the top 6 questions. I know that we're right on the hour. I promised you 5 minutes before. I do apologize, I've gone slightly over, but I did start 4 minutes late. There were some great questions that came out, and I'd love to get a sense if these would be of value to you. In the chemical industry, a question was asked, how do I get growth in the right team? In a textile business, I was asked, freeing up my time so I can focus on growth and new ventures. Logistics, staff are not engaged and attention to detail is poor, stemming from the lack of focus and culture of apathy. Industrial economy, not enough work. Mark, I can see you nodding. In the agricultural sector, coming out of Zanin, one of my favorite parts of the country, uncertainty, one word that carries a lot of meaning to it. And then in security technology, a lack of exit strategy. I'm going to get to these questions, but before I do, I know that I'm over time. I want to end off, prior to answering these questions, for those of you who can't remain with us, with one ask. As a next step, let's meet and see if we can impact your business. If we can, we will provide you with a fully costed growth proposal with a plan to get your business Aurik into an asset of value. If that proposal works for you, we will still engage further by giving you an experience of how we would work together through what we call our InvestCom. Our InvestCom is where we get people outside of the people you have met, our broader team, to answer 2 questions. Number 1, is there a good fit between us as partners? And most importantly, given what we do and how we do it, will we get a growth impact in your business? We do this because of the fact that our growth is linked to your turnover growth. If you don't grow, we burn, given the resources we invest in the business. It also gives you a great opportunity to experience us and say, well, are they a good fit for me? And do I believe that in them doing what they do and how they do it, I will get the growth outcome, not the advice that I'm seeking to get in my business. If we can't work together or don't fit, let's keep in touch. And what we will do in order to do that is on a weekly basis, we will share with you a 1 to 4 minute video called This Week at Work. It is a video on business owner insights to business ownership and the business of owning a business. And it tackles and deals with all the contemporary current issues that many of our clients are experiencing across the US, the UK, South Africa, and Europe. And through that, we have very short interviews. We have some great insights. What's fantastic about it is if you are in the transport industry and you are facing a challenge that you can't overcome, you might well learn an insight from the dentistry industry, Robin, that could be of value to you in the transport industry. It's a community of knowledge and insight that we build in order to support each other and make sure that the voice is coming from people just like us. So with that, those of you that do need to leave, I really do understand. I'm going to end the presentation and open the floor to questions, being sure at the same time that I do certainly address these questions here.